Have you ever looked at a stock and thought, if I had bought this earlier, I'd be way ahead now? It's a thought that many investors have had at some point, especially when they see the meteoric rise of companies like Amazon, Tesla, or Apple. The good news is that there are still incredible companies hidden in the market, waiting to be discovered before their prices explode. These are what we call hidden gems, undervalued stocks that have massive growth potential if you can spot them in time. In today's video, I'm going to show you exactly how to identify these hidden gems. I'll share simple strategies, practical tips, and real-life examples that you can use to find opportunities that many investors are overlooking. Whether you're just starting your investment journey or you've been in the market for years, these insights can transform the way you think about investing and help you take your portfolio to the next level. So, stay with me until the end. You won't want to miss this. Hey, what's up? I'm Brandon, and if you're enjoying this content or finding it helpful, don't forget to smash that like button and subscribe to the channel. It really helps us out, and make sure you don't miss any of our future videos. First things first, what are undervalued stocks? Simply put, they are stocks trading at a price lower than what they are truly worth. This discrepancy often arises because the market hasn't fully recognized the company's potential or because of an overreaction to temporary bad news. Let me give you an analogy. Imagine finding a luxury car worth $50,000 being sold for just $30,000. The car is in perfect working condition, but for some reason, the seller or buyers don't see its true value. That's exactly what happens with undervalued stocks. These opportunities are out there all the time, but the challenge is knowing how to find them. You might be wondering, why does a stock become undervalued? There are several reasons. Sometimes, the market reacts irrationally to a single piece of negative news, like a temporary drop in quarterly earnings or a leadership change. Other times, it's because the company operates in a sector that isn't trendy or isn't getting much attention from analysts. A great example of this is Amazon in the early 2000s. Back then, many people doubted the e-commerce model and didn't see Amazon's potential. But those who recognized its value early on saw astronomical gains over the years. This same pattern repeats itself with stocks today, and if you know where to look, you could find the next big winner. So, how can you identify these hidden gems? The process is simpler than you might think. The first step is to understand the concept of intrinsic value. This refers to how much a company is actually worth based on factors like its assets, profits, and growth potential. You can calculate intrinsic value using tools like Yahoo Finance, Google Finance, or stock screeners available online. For example, look at a company's cash flow. If the company is generating significant revenue and cash flow, but its stock price doesn't reflect that, it could be an undervalued opportunity. Next, you should look for catalysts. Catalysts are events or developments that can drive a stock's price higher. These could include the launch of a groundbreaking new product, a strategic partnership, or even regulatory changes that benefit the company's sector. For example, Tesla's announcement of new electric car models caught the market's attention and significantly boosted its stock price. The key is to stay informed about news, earnings reports, and industry developments related to the companies you're analyzing. The third step is to use simple but effective financial indicators. One of the most commonly used is the price-to-earnings ratio, PE ratio, which measures how much investors are willing to pay for a company's earnings. If a stock's PE ratio is significantly lower than the industry average, it may indicate that the stock is undervalued. Another useful metric is the price-to-book ratio, PB ratio. If a company's stock price is trading below its book value per share, it could mean the market is underestimating its actual worth. The trick is to compare these metrics across similar companies in the same sector to identify outliers. Now let's make this practical with a couple of real-world examples. Netflix is a prime case of an undervalued stock that turned into a massive success. For years, the market underestimated Netflix because the streaming model was seen as a risky bet. However, those who saw the potential early and invested reaped enormous rewards as the company grew into a global entertainment giant. Another example is Microsoft during the early 2010s. At the time, the market didn't fully grasp the potential of Microsoft's investment in cloud computing. Those who anticipated this shift saw their investments multiply as Microsoft Azure became a leader in the cloud space. But what about today? Let's discuss sectors that could be undervalued right now. One of the most exciting areas is green technology. With governments worldwide pushing for renewable energy and sustainability, companies developing clean energy solutions have immense growth potential. Yet, many of these companies are still flying under the radar. Another promising sector is healthcare technology. As the global population ages, there's an increasing demand for innovative medical devices and biotechnology solutions. Companies that specialize in these areas are well positioned for growth, but some remain undervalued due to a lack of widespread attention. The nuclear energy sector is also worth exploring. Once overshadowed by concerns about safety and waste, nuclear power is now being reconsidered as a clean and efficient energy source. With rising energy demand, companies involved in nuclear technology could see significant growth. Emerging markets like India and Vietnam also hold hidden opportunities. These economies are growing rapidly, and local companies in sectors like technology, manufacturing, and consumer goods often trade at a discount compared to their global peers. For investors willing to do their homework, these markets offer a chance to capitalize on early-stage growth. AI technology applied to traditional industries is another space to watch. Many companies are leveraging artificial intelligence to transform sectors like agriculture, manufacturing, and logistics, yet they're still valued like conventional businesses. This disconnect presents an opportunity for forward-thinking investors. The infrastructure and construction sector, driven by government stimulus policies, is another promising area. Infrastructure development is critical for economic growth, and many governments are committing billions of dollars to modernize transportation, energy grids, and public facilities. Companies involved in this sector, whether they supply materials or provide services, are likely to benefit from these investments. Sustainable agriculture and food technology is another undervalued sector. With the dual challenge of feeding a growing population and addressing climate change, companies developing innovative agricultural solutions are poised for success. Similarly, the commercial space sector, fueled by advancements in technology and decreasing costs, is a frontier that could deliver long-term returns for investors. Let's not forget about entertainment and digital content in smaller markets. While giants like Netflix and Disney dominate globally, regional platforms and independent creators in emerging markets are thriving. These companies cater to specific cultural and linguistic needs, creating loyal customer bases. For example, a streaming platform in Southeast Asia or a game developer in Latin America might be overlooked by mainstream analysts but hold significant growth potential. Finally, battery technology and energy storage is another critical area to watch. As the adoption of electric vehicles and renewable energy continues to rise, companies developing advanced battery technologies could experience exponential growth. Before wrapping up, here are some final tips to help you uncover undervalued stocks. First, use tools like Morningstar or Stock Rover to set up alerts for stocks with low PE or PB ratios. Second, always compare companies within the same industry to identify those that are priced below their peers. And third, don't forget to do your own research. Understand the company's business model, competitive advantage, and potential risks before investing. Now it's your turn. Which stock or sector do you think is undervalued right now? Let me know in the comments below. I'd love to hear your insights. If you found value in this video, make sure to subscribe to the channel, hit the notification bell, and share this content with someone who wants to improve their investment strategy. See you in the next video.